When you think of banking and you think of journalism and you think of people reporting and writing and analyzing it, it is really Tamal.
Tamal to me is the Michael Lewis of India.
Tamal has been the R.K. Lakshman of our sector.
Tamal Bandyopadhyay is without a doubt India's finest banking writer.
Tamal Bandyopadhyay is by far one of India's most trusted and authoritative writers in banking and finance issues with a formidable reputation for professional integrity.
A prolific writer of the contemporary Indian banking issues.
He has also been playing a trailblazing role in Indian financial journalism.
Tamal calls a spade. I think it is this trait that makes his book Pandemonium a book really worth reading.
And for anybody who is interested in India, this is essential reading, and there is nobody better than Tamal to tell this story.
To a student, it can be a textbook. To a public policy expert, to a banker, or to a researcher, an invaluable reference material. In that way, the book is completely unputdownable.
Pandemonium, the Indian banking tragedy, is a very difficult topic, but something that needed to be addressed. And Tamal has turned it into a thriller.
There can be no better chronicler than Tamal Bandyopadhyay, who is among India's finest financial journalists and a real guru when it comes to banking journalism in India.
Namaskar, good evening, and also good morning or good afternoon, depending on the place from where you are watching this program. I am Chitralekha Banerjee, your host for this memorable day. I welcome you all to this virtual launch program of the book Pandemonium, the Great Indian Banking Tragedy, authored by the eminent business journalist Tamal Bandyopadhyay. It was only yesterday that the book was launched in Mumbai, and today it is happening here at Kolkata. In this virtual world, there is no geography. Yesterday, the publisher Rowley Books hosted the first event, and for Kolkata, we are the first one to host this event. Public Relations Society of India, Kolkata chapter, we feel privileged to get this opportunity of launching the book. This will be followed by a keynote address and a panel discussion. The Public Relations Society of India is a 63 years old national body. May I now request Shomotit Mahapatra, the chairman of Public Relations Society of India, Kolkata chapter, to give his welcome address.
Namaskar. It is well enough that the people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning. These words by Henry Ford ascertain how a book on banking for the common mass is the need of the hour. Welcome to another eventful evening organized by the Public Relations Society of India, Kolkata chapter, the launch of Pandemonium, the Great Indian Banking Tragedy, by the Indian business journalist Tamal Bandyopadhyay. People organize events to improve public understanding on different topics. This evening, we have gathered on a virtual platform to celebrate a form of art that encourages us to understand the different perspectives. It is an honor and a rare privilege that we are getting an opportunity to host the launch of this precious book. Though the author needs no introduction, still the formality demands it. Tamal Bandyopadhyay, a lifelong reporter for the last 25 years, he is an award-winning national business columnist and a best-selling author. This is his sixth book. I'm sure many among us are having this question, why Public Relations Society of India is launching a book on banking. Well, with the unfolding of the event, your curiosity will be satisfied. The current banking environment demands a switch in marketing and public relations focus from a product-centric approach to a customer-centric approach. This is exactly where Public Relations Society of India is launching a book on banking for the common mass, one which will help people understand the nitty-gritty of banking in the simplest form of terms. We are quite aware of the home loan rate being at historic low now, less than 7%. The one thought which often plagues our minds is the safety of our money in banks. The present times require all of us to be aware of the changes taking place, especially when it is concerned with our finances and economy. Then there comes the issue of public sector banks being laden with NPA as a part of our lexicon now. The changes in our economy have seen an upsurge in the consolidation of banks. Out of the three banks in Kolkata, Allahabad Bank, UBI, and UCO, only UCO exists in its old form while the other two are being merged. We are well acquainted with the stories of bank frauds like Nirav Modi and Vijay Mallya and others, which tell us of the bankers being compromised or arrested for embezzlement. Tamal's book has all the answers. He has told the story of the Indian banking in a simple way. The past was not so glorious. The present situation is going through the tunnel of Thames and the future is uncertain. So I urge all of you to get a copy of this book and read it. It's a novel, a financial sector thriller. Someone said Tamal is the Arkpe Lakshman of Indian banking, to which I agree. The book is meant for the common people of India like you and I. Let me now launch the book here at Kolkata. And this is the book we have been awaiting. Yesterday it was launched at Mumbai and today at Kolkata. So with this, I once again request the host of the evening, Chitralekha Banerjee, to take it forward.
Thank you, Mr. Mahapatra, for your welcome address. Now I would request Srimati Rita Bandyopadhyay, the renowned singer, to kindly start the Saraswati Vandana, marking today's memorable function. Welcome, ma'am.
No.
Thank you. Thank you, ma'am, for this wonderful rendition. Now I would formally introduce our keynote speaker, Mr. D.N. Ghosh. An authority in banking and financial history, he has been a bureaucrat, a banker, a professor, and a corporate leader. He headed the State Bank of India as the founder chairman of Credit Rating Agency (ICRA). He was the chairman of the Board of Governors of IIM Lucknow in its formative years and has held several top positions in the corporate world and has authored several acclaimed books. Sir, I request you to kindly give the keynote address.
Good afternoon, all of you. Let me at the outset offer an apology for somewhat lack of clarity in my voice. Don't blame me for that. Blame my age. I would just. I hope that you will bear with me for about 15 minutes or so. Well, it has been always a pleasure to talk and read about Kamal's books. This is the sixth one, and provocative as always. Provocative in the sense that it takes the cozy complacency of the actors of the scene, and particularly of the regulatory and sovereign authorities. Kamal breathes finance, and who could have thought of a better person to survey the goings on in our banking and financial world and capturing its essence. Well, the word pandemonium captures it all. I looked up the Oxford English Dictionary. Of course, one of the books also elaborately deals with what pandemonium is. But I looked up in Oxford and I get the definition, quote, refers to a situation in which there is a lot of noise, activity, and confusion, especially because people are feeling angry or people are feeling frightened. Well, this kind of pandemonium is not new in India's banking and financial evolution. The first one, post-independence, during the 50s, had its roots in what we inherited. What we inherited was a large number of legal entities, as many as 737 in number, of diverse size and capability, who are used to reckless lending and speculative culture, with little or no disciplinary control by the Reserve Bank. System consolidation with compulsory merger was undertaken rapidly between 1960 and 65, as we all know, and reduced the number of a manageable lot to about 94 units. While the first pandemonium was petering out, we had the second one overtook us. Commercial banks of India, as we know, were then shut out of agriculture and allied sectors. That being the holy cow of the politically powerful cooperative sector. But political orthodoxy had to give way to economic reality. The resource base of the cooperative sector was moving too thin and too inadequate to meet the ever-rising demands out of the impact of the Green Revolution. Also, commercial banks were too elitist. The number of borrowers were too few, and the number of borrowers stagnating virtually at the same level. I remember the figure, it was about 1.2 million or so. Same number over the whole of 60s. Clearly, the fundamental disequilibrium then between what the economy needed and what the banking system was structured and oriented to provide had to be addressed. Reality dawned on us. Commercial banks stepped in the agricultural sector. Simultaneously, massive and functional diversification of commercial banking services was pushed well, through well-timed step of bank nationalization. The next phase had been one of relative stability. We saw a remarkable transformation in the advances portfolio of commercial banks. Their involvement with the industry, which is about 1/3 of the advances portfolio, shot up to about 2/3. This was possible because of close collaboration between the top lending institutions, or you may call them development finance institutions, DFIs, and commercial banks. The former being the custodian of the expertise of the techno-economic appraisal as the basis for taking long-term financial commitments, and the bankers providing working capital finance. It was this clear-cut division of responsibility that saw us through, without much of a systemic hitch, over the years of our planned and state-directed development strategy. That cozy world of state planning collapsed in the early 90s. We migrated to a market-oriented competitive system. The progress of migration was a mixed record. In commercial banking in particular, we started experiencing several hiccups, of which NPS was becoming worrisome, a few of which persisting with chronic obstinacy. Yes, indeed, it is a tragedy, a great tragedy, as Tamal calls it, serious and sad tragedy that has been stunting the market stability. Well, this has been due to a conjunction of several factors. A few were attributable to some of the decision of the authorities, and a few to the behavior of the market players. In the early 90s, development finance institutions, DFIs, were distributed. It was all too sudden, taking little cognizance of the fact that commercial banks with little in-house experience of appraising viability of large projects in a competitive market dynamics would be severely handicapped. Also, let us not forget that this came at a time when commercial banks were getting flooded with large investment proposals, numerous investment proposals from entrepreneurs who were freed from the restrictions of the licensing authority and were testing our newfound freedom with reckless abandon. Banks had to rely on outside appraisal, which, as is now turned me out, and as has been explained very thoroughly by Tamal in his book, with indifferent quality. In some cases, viability of projects were worked out on the basis of certain assumptions that the government will come out with supportive changes in policy, such as land acquisition, etc. Also, equally important, and this is important, asset liability mismatch became too difficult to manage, given the lack of depth in the capital market. Banks are caught in crossfire. The seats of quite a few of these large NPAs in core industries and infrastructure sector were sown at this time. The blow-by-blow account given by Tamal as to how this originated is a fascinating read. Come to PSPs. Now let me come to PSPs. These constitute the largest segment of our banking. They have an extraordinary public responsibility. They have also an entrepreneurial responsibility to maximize profit in order to attract and enlarge capital. It is a judicious balancing of market ambition and public responsibility that is the key to stability in the credit market. Unfortunately, they have been unable to adapt themselves to the dynamics of the market situation, as the government, the owners, have been reluctant then and even now to allow them necessary freedom and flexibility to function and mature as responsible market players. For the PSBs to prosper, the owner has to ensure that they are being managed by people who merit public trust and who are dedicated to the preservation of the integrity of credit. We have to remind ourselves all the while that it is the government as owners and not the Reserve Bank as a regulatory institution, often depicted as the guilty party, who have to create the necessary conditions. The inevitable is happening. The PSPs are marginalized with a drastic fall in market share. It is indeed tragic that the full potential of these PSCs have not been realized. And over and above, the owner have consistently failed to fulfill his responsibility of providing adequate capital to support the ongoing lending process. And to cap it all, the owner is used to look the other way as the enforcement agencies swoop down on our employees. These agencies have little knowledge and understanding as to how lending decisions are taken and how to distinguish between credit decisions taken with commercial judgment and those taken with intentional and self-interested fraudulent intentions. All this eats into the morale of the employees, which is as critical a capital as the balance sheet numbers. Tragedy is always depressing, but we come out of it through a process of catharsis. In the first Pandemonium, it is the consolidation of the system through compulsory acquisition that saved us. In the second, it was bank nationalization. I have often asked myself now, what will be the catharsis in this current one? I have no doubt in my mind that in the current situation, it is the government that must be prepared to go through a process of catharsis, shedding the ownership of the bulk of the PSBs while keeping a few in the overall national interest. This will contribute substantively to the cleansing of the system with supportive policies for the development of a vibrant capital market. Will this happen? Will this happen? Nothing like that is in sight. The opening chapter of the book is a brilliant chapter which Ramal has given us some insights how government looks at these issues. Let me end by quoting from this chapter what the finance minister of the government of India said at an international gathering. And you must read the whole chapter carefully. I'm just quoting just 2-3 lines. Quote, Indian public sector banks did not have a worse phase than when the combination of Dr. Manmohan Singh and Dr. Raghuram Rajan as Prime Minister and Governor of Reserve Bank had. Well, should I say anything or comment on this? Too simplistic an attitude to deal with a very, very complex situation. Can anyone see any light at the end of the tunnel? Well, Kamal's concluding chapter is a brilliant chapter also. It throws out so many issues which you have to consider. We considered none of these. So with a very heavy heart, let me at the end of my life also say that something which we built up a brilliant banking institutions and which are heading in something, I don't see any light at the end of the tunnel. Thank you.
Thank you, sir, for this wonderful address. Now, moving ahead to our panel discussion, let me now introduce our moderator, Professor Ashok Banerjee. Professor Banerjee is a professor of finance at IIM Calcutta. He served as dean in the same institute for 3 years. Professor Banerjee was instrumental in setting up a finance lab and a technology business incubator at IIM Calcutta. Welcome, sir. The stage is all yours now. I request you to take the session forward.
Thank you, and good evening to all of you, and welcome to this panel discussion. We have a very limited time and great luminaries on the panel. Before I introduce the panel members and invite them to speak. Just a brief overview. Uh, if the banking sector does not do well, corporate sector cannot grow. Whereas if the corporate sector don't do well, the bank's balance sheet look ugly. So this, twin balance sheet problem, the interlinkage between financial sector and the corporate sector is well talked about, and Arvind Subramaniam earlier highlighted in his economic surveys about this twin balance sheet issues. And in Thomas' book, he talked about the ramifications if these two sectors don't work well, then what happens in terms of NPAs and fraud and so on and so forth. So in that sense, this is a very timely book because the entire financial sector of the country is going through a journey which requires a new kind of institution, and that journey is just passed with exogenous shocks like health shocks, like pandemic, sorry, and also technology shocks. So let me introduce with this background the panel members. We have with us Mr. Basu, former MD of State Bank of India. He was also MD of the SBI Life. We have Mr. Chandrasekhar Ghosh, who is the MD and CEO of Bandhan Bank.
Thank you.
Welcome, sir. And also we have Mr. Tamal Bandyopadhyay on this. So welcome you all on the panel. So the format is like this, that initially I will request each one of you to speak for about 5 minutes, your opening remarks, and then we'll have a discussion on the panel. So first, Mr. Rajit Basu.
Thank you very much for having me here and for introducing me. First of all, I begin by congratulating Mr. Tamal Bandyopadhyay for once again coming up with, I have not had the occasion to go through the book as yet, but I have read the transcript which he has sent, and it is looking like it is going to be a blockbuster if there was any in the book industry. And all credit to him. We keep reading his columns day in and day out, and the way he manages to go very deep into various issues which impact the banking sector and especially public sector banks with a very great degree of accuracy in many of the cases, because we read a lot of literature, some of them as part of the banking system, we know that how much truth is there or how much of exaggeration is there. So all credit to him. I wish him all success, not only for this book, but in his future endeavors that he will be taking up. Very quickly, I will confine myself to some of the points which Sri D.N. Ghosh mentioned. He is one of the legendary chairman of State Bank of India from 1985 to 89. That was around the time when I had joined the bank, and we have indeed come a long way. In fact, if you recall, liberalization in the Indian economy happened just after that. And this was, I think, Rajiv Gandhi's tenure as Prime Minister broadly, which was setting the foundations, and liberalization then came in 1991. A lot has been said about public sector banks, but I will take up, since it is an open forum asking me to speak. I think 2-3 things are being said all over. Unfortunately, I could not attend yesterday's program where both Mr. Viral Acharya and Mr. Rajneesh Kumar was there. It would have been very interesting. But if I were to sum up the 3 or 4 things, and some of them Sri D.N. Ghosh also touched upon, which are engaging the mind of the businessmen, the economic journalists, and the
Some connectivity it seems.
did I get lost for a while?
Yeah, for a while. You can continue.
Yeah.
Just before you start, sir, just one announcement. There is some back noise coming. I request all the speakers to mute their mic. Yeah, go ahead, please.
Right. So what I was saying was that I'll try to confine myself to 2 or 3 major issues about public sector banks and private sector banks also, which engage the minds of people who are avid followers of the banking system. So first and foremost, one is that public sector banks, essentially there is a fundamental problem. Now, this is a social, political, and economic decision whether to have public sector banks or not. And this is, even France had a Credit Lyonnais, which was a government-owned institution till as late as 80s or 90s. I would not like to get into that. But if I were to be told that there is only governance problem in public sector banks, which led to the tragedy that Mr. Bandyopadhyay pointed out, I would be the first to point out that that is not correct. Because I do not need to cite examples, we have governance issues in which the largest bank in the country this year had to bail out a new generation private sector bank in a manner which has been considered exemplary by investors across the world. So much for private sector having better governance than public sector. NPAs in the media almost always it is that it is a public sector problem. It is not well established that we are the largest, SBI is the largest public sector bank, not well recognized. ICICI, another bank, the largest private sector bank, I do not wish to name it, that is not polite. The NPA levels at the peak was higher for the largest private sector bank, which was in corporate banking, as compared to SBI. Both were bad. There were issues. I will not get into, the time is not enough. So that is one fundamental thing that we need to address. And I will come back to Mr. D.N. Ghosh, that the way to address it is to have even better governance structures. One of the things that you might have noticed is that in SBI, we are very, very proud of our subsidiaries. All the subsidiaries do well. Whether it is an SBI Life, SBI Mutual Fund has become the largest subsidiary, overtaking HDFC and ICICI. I think what we managed to do well is to have that correct balance in the relationship between the promoter or the parent and the subsidiary. I have had the fortune of leading a subsidiary for almost 4 years when we did a lot of things, including going for the IPO. And the chairman of SBI is also the chairman of the subsidiary. But other than coming in board meetings in my 4 years, I did not have even a single occasion when the chairman had called me to say that you run your company in this manner. As far as public sector banks are concerned, the government also, I don't think, tries to intervene too much. As far as SBI is concerned, I think we have been very fortunate. I do not know about the smaller public sector banks, maybe because they have needed more assistance, that they have come in more closely. But that balance in the relationship needs to be maintained. The other issue that I would like to touch upon, and which is very topical today, is banks have become credit averse, credit risk averse. The first answer that I have given, and I had the opportunity of handling 2,500 of the corporates of India, 2,500, 2,300 were in the group that I was directly handling as managing director, and another 200 of the top-notch corporates were also being looked after by me as a board member. The corporates at this moment are risk averse, and rightly so. As you rightly said, there is a symbiotic relationship between the balance sheets of corporates and the balance sheet of banks. The tragedy that had taken place, whatever be the reasons, there are external reasons, as Shri Ghosh pointed out in his lecture, there are internal reasons also. And the banks have learned from that. We have enhanced our risk management capabilities. And to the extent, to the point that today, when the Kamath committee has announced that anyone can come in for a restructuring, in SBI, we've hardly had any bank coming through. The market was saying that you will have at least 14% NPAs. Today, our credit cost, if you have seen the SBI first half result, which was just declared, our credit cost on the corporate book was lower than 0.3%. Historically, it has never happened for SBI ever. So it is a combination of improving the risk management capability of the bank and the fact that corporates, for good reason, have become also, there was a time when they would leverage and go ahead and have a business model which they themselves were not sure. So you have to link your ability to lend or not, or to borrow or not to borrow, based on your business model and your ability to take it forward. If there is a model which is good and which you have, then banks will lend. If we do not lend and grow our book, that is the biggest risk that we are carrying. I was often asked, I was head of risk management also in the bank, that what is the biggest risk that you see? I said the biggest risk that we see is if at any point in time, SBI stops growing. Because without growth, including in the corporate book, our balance sheet will shrink, and that is the first sign of disaster. That is how we treat our own corporates. So these would be the 2 or 3 areas which I thought, and debatable areas. I have given my views. I think good enough for a starting point.
Yeah, thank you. Thank you so much, Mr. Basu. So I now move to Mr. Ghosh, Chandrasekhar Ghosh, because he has started his innings as a banker on a quite different, route or pitch. So, Mr. Go, over to you. First, few opening remarks at the beginning about the sector. Over to you. You are not audible.
Okay, now is okay.
Yeah.
Thank you, the Kamal, the 6th number of book I am also attending in Calcutta, and 4th book you are written on Bandhan. That is also very renowned. The market have been accepted on that, and I know you from my side how the complex issue you are written as a simple way. I hope that this book also written in the same way. And second quality of Tamalda, story writing some way on that writing, and readers are automatically involved on that the book and understand it clearly. That is the 2 things I find out from this book, whatever the small part I have been seen. And finally, I say that why not this book name is come the Samudra Manthan, which is the banking industry. Manthan have been done from regulator to public and private sector bank, and everything you have been covered. It's maybe large Samudra Manthan. And finally, which we are getting from that, the reforms and changes, and which are needed to leverage for the new normal, which can be help to the banking industry. The internally developed many of the things, not only the external part on that. If I say that the couple of things you have been mentioned in here, the poor monitoring is a very key point. If it is in poor monitoring in the banking industry, especially in a financial industry, this is a very much dangerous on that. As per my knowledge from my experience of very small part in the microcredit and on the banking sector, it has been actually the low NPA and good portfolio growth is coming because of the physical and the online monitoring to the ground level. So that is, you are also mentioned some point on that. The poor monitoring is a very big issue for the Indian banking industry. And you also mentioned the how RBI is a control. Is a very given the very good example on that. So that we are all are aware about it now. It can be very much a good mirror for us to see that the banking industry and internal bank, how the regulator also looking, and it has been very strong message for the outside, the investors and others, how the control by the regulator to the banking industry in India. So that is very good way you have been analyzed on that. And I see that this is very helpful for us in the time of COVID situation, how we can be like to relook our total system process, everything. I only finally I've been like to not a debate is a Ashok sir mentioned about it, the if corporate based and banking industry based. Is it like on that you are like to remove the small sector of the industry who are not in a corporate mode and individually microcredit, small credit, you're like to remove them? Without them, banking industry can be like to perform good? No. That is also now playing the very big role You see that the NPA situation or per capita income issue that have been contributed by the small entrepreneurs is more. They are not in a big corporate or small corporate, but they will be once upon a time come as a big corporate also. Hope, and then you cannot missing on that this part of the banking industry. I wish this book can be help to the bankers, investors, and all the outside people who are making the deposit to the bank. Their trust will be create more in the banking industry, and which bank can be given on that, how the regulator is controlling to the banking system and how the banking system running on that. Yes, if it is a big bank, if it is a big enterprise, always some fault is there, and how quick it has been identified that fault and rectify it on that can be also recognized in the Indian banking industry. And Tamal, the written book also always help on that the banking industry of India. I wish the success of this bank, and people will be more buy and read it, and it can be also given the trust to the banking industry of India. Thank you to Tamalda again, and thank you all of you.
No, suppose my intention was not to any way belittle the unorganized sector or non-corporate sector. When I said corporate sector, I meant MSME also. But yes, of course, I did not mention the rural India. But I'll come to that later, a little bit later when we discuss. Now let me turn to the author of the book, the major highlights of this evening. And when I was reading the praise on this book, I saw Mr. U.K. Sinha mention that his sleep was disturbed because he was doing a binge reading of the book. He could not leave the book. He just finished it one go. And he also mentioned about his narrative style. It comes from his English literature background. So English literature with the knowledge of the industry was a very lethal combination, and that helped him become such a successful writer and a prolific writer. So, opening remarks from Kamalda, your experience in writing this 500-page huge book, epic type book. Yeah, over to you.
Thank you, Professor Banerjee. Yeah. My experience is essentially, if you say that how I got the idea of the book is what Mr. D.N. Ghosh mentioned. He did not mention the context. In Columbia University on 15th October 2009, our finance minister was delivering a lecture. It's a sort of, one particular institute is called Deepak and Neera Raj Center on Indian Economic Policies. 2015 it started, and since then our finance minister Arun Jaitley used to go there in 2015 and then 2017. And this was Mrs. Sitaraman's first visit to that particular center, and he spoke about Indian economy and essentially our dream of turning into a 5 trillion economy. That's what. And then there's a moderated discussion. Moderator was Dr. Arvind Panagaria, and one gentleman stood up and he asked our finance minister, referring to a speech of Dr. Raghuram Rajan given at Brown University, saying that too much of centralization in India government actually it's coming on the way of achieving growth, economic growth persistently. And how does she react to this observation? And she took her time to understand what is the question. And then she said, I have tremendous respect for Dr. Raghuram Rajan, but let me tell you. And then she said what Mr. D.N. Ghosh said. It's the Raghuram Rajan and Manmohan Singh combination. They were responsible for the mess in public sector banking. So one person who was present in the audience, real time, the person called me, he said, Tamal, since you have been writing on Indian banking and finance for long, we all read your column. What do you think? How do you react to this? So that is the typical eureka moment, or that set the ball rolling. I thought, why not do? Of course, publisher was also very keen to have that. Raleigh Books Kapil, he also thought it's a great idea. And then I reached out to all the past governors since economic liberalization. What is their take? Is it Dr. Rangarajan who actually demolished the DFIs and created the field for universal banking? But our banks were happy with working capital loans. They did not have the project financing. Is he responsible for this? Is it Dr. Reddy, during whose regime, the golden period of Indian economy between 2006 and 8, 9% growth, low inflation, but credit growth was 3 times more than the economic growth. So the irrational exuberance. Is he responsible for this? Is it Dr. Subbarao, whose ultra loose monetary policy post Lehman crisis? Is he responsible for this? Is Dr. Raghuram Rajan, was he very aggressive in exposing the soft underbelly of the banking system? So I came and approached all the central bankers with my questions, and they give different point of views, different answers. And that's how, actually, this is not one book. This is many books stitched together. I heard our State Bank of India MD Basu sir is talking about, I think you thought, Mr. Basu, that I have spoken about great Indian public sector banking tragedy. It's not public sector banking tragedy. I'm talking about great Indian banking tragedy, where private sector also equally responsible. There is a chapter called Fallen Angels, where is a detailed thing on Yes Bank, how Rana Kapoor turned Yes Bank into My Bank and then No Bank. And that chapter also includes how Mrs. Chanda Kochar, made the board eating out of her hand, ICICI Bank. So, there's a perception. In fact, yesterday's function, and that's what confirmed my belief that I have been fair to everybody else. Rajneesh Kumar, ex-SBI chairman, said, I'm not being exactly fair to public sector bankers. Subbarao said, I've not been exactly fair to central bankers. And Viral Acharya said, I'm not exactly fair to private sector bankers. So I think I have been fair to everybody. And as Ghosh Chandrasekhar Ghosda said, that I'm a storyteller. So I have not been able to, I'm not capable of, because I am a semi-literate person in finance. So you would not like me to give some bhashan and this way it should have been done, that way it should be done. I have not done that. But I have got in touch with the people who are involved in this. They are the real actors, the dramatis personae. And I hear their stories and I stitch the stories together. And there you will find everything, how banking crisis spilled over to non-banking sector and become an economic crisis kind of thing. You will find the over-activism of investigative agencies. You will find everything there. And then there's a unique part of it is a chapter where I have only told the story through charts, 16 charts, which spoke about everything, like how public sector bank is losing its market share fast, the stealth work privatization, how NPA has been going up, where does India stand between among the G20 countries, and so on and so forth. So what through this 150,000 words I could not have probably said anything, those 16 charts said everything. So at the end of the day, it's a what's and all banking story, but it's more than that. If you ask me, it's not a banking tragedy as such. It's an India story since economic liberalization. And I just ended in the last 30 seconds. The last question I asked that, at the end of the day, who has failed whom? Is it India failed its banking system or the banking system failed India? I think both are responsible. Bankers are not responsive. We have a repressive financial system. There's a huge opportunities everywhere. We don't see that. Mr. Chandrasekhar is one of them, not because he is present there. He has seen that. He has taken banking to the hinterland. But overall, banking is a cushy job. We don't want to go beyond our comfort zone. So bankers failed the nation, and the India also, the owner also has failed, because regulation is not one ownership neutral. I mean, I am sure everybody knows that DBS in Singapore was a public sector undertaking. It's floated by Singapore government to meet certain needs. And where is DBS now? That's a classic example. You can be the owner, but you let the entity run its own way. Even though our SBI managing director had said that he had absolute freedom, trust you me, I don't trust you. I trust you as a banker. But when you said that no, government is an arm's length relationship, I don't trust you. So to repeat, this is beyond banking. This is the India story. I end here, sir.
Thank you, Tamalda. Now we'll have some discussion because fortunately we have this great panel here. I will turn to Mr. Basu now, and let us set our discussion in the current context, what we are going through now. Now, recently there was an IMF report, and everybody talks about IMF's economic outlook piece, but very few people talk about IMF's financial stability report. So in the financial stability report, it says that there are huge financial vulnerabilities, be it in the banking sector, be it in the insurance sector, be it in the corporate sector. So my question to you is that given, and this started not during the COVID, vulnerability started even before COVID. So my question to you is that given this vulnerability picture, this pandemic, and we really do not know when the vaccine is coming, is it going to exacerbate this problem, or are we going to see recovery very soon?
Right. Thank you. Very good and topical question. I'll just take half a minute to, clarify what I had said in the beginning. So apart from Tamalda's book, I interpreted the opening remarks to be some opening remarks which I want to give. And I just picked up three things which are currently topical about public sector banks, which I understood. It was not about the book at all, because in fact, I don't know what precisely is in the book. And one other clarification on the arm's length. In fact, my view would be that the relationship which SBI has with its subsidiaries, and that is the point I was trying to make. It's a very delicate, we are the owner, like the government is the owner of SBI. SBI is the owner of SBI Life, SBI General, SBI Mutual Fund. And we, over the last 20 years, have been able to bring about a relationship where we exercise the ownership. The CEO is from SBI, but otherwise these companies are run on purely private sector lines. That may not be possible at this point in the banking system. But at the same time, to some extent, while the government's relationship with SBI has been reasonable, my recommendation would be that the kind of relationship which SBI has with its subsidiaries, if the government were to have with SBI and the public sector banks, I think that governance would improve further. In fact, I'm not naming him because he's very well known. In one of the interviews that I had taken for when I became managing director, we have a banks board bureau. So one of the prominent members, in fact, had asked me this question and I had given this response, and he had agreed to this and had said that this is one of the recommendations that they had given to the government. So that is just one clarification. One point about where we stand today and how vulnerable we are. So if you look at it, I'm not going into the context of Madam Finance Minister's visit to Colombia and what she said there, but Mr. Raghuram Rajan came into the Indian banking scene in 2013 September as the RBI governor, and before that, for a year, if my memory serves me right, he was the chief economic advisor. So, upon coming into RBI, at that point in time, also India was very vulnerable. If you recall, our inflation was just going haywire. Growth had started dipping from 2011-12 and 12-13, which in fact sort of ensured that there was a change of government. And apart from dealing with the exchange problem, where he had taken a lot of steps on the very first day, if I recall, 4th September 2013 was when he took over. The next thing that he wanted to tackle was on the systemic issues that had arisen in the corporate banking. And he had two ways to go about it. I mean, it was not just him, but the entire Reserve Bank as well as the government. They had two ways to go about it. One is to straight away do what was done 3-4 years later, and the other was to give a chance. So then he said that restructuring has become like an evergreen. He was the first man to say that. And that was the first time when he said that you can do restructuring. We had schemes like CDR and things like that. For a short while at that time also, I was in corporate banking as a general manager. And to the point, he said that, but there has to be a timeline for this. You cannot go about indefinitely doing it. Subsequently, there was a change of government, and he continued. It's not well recognized that almost for 2.5 years since the new government took over, he was the Reserve Bank governor. And what is today recognized as the Asset Quality Review, the AQR, was taken up in his period. I'm referring to this because I think it has
Some connectivity issue.
Yeah, that's.
Mr. Basu, can you hear us? Okay, I'll get back. I'll get back to Mr. Basu. There is some connectivity issue. Let me go to Chandrasekhar Da here. So there was a connectivity issue, Mr. Basu. I'll get back to you.
I will conclude. I will conclude my vulnerability part. So, based on all that, we have come to a stage where we were able to address all the issues that had arisen between 2015 to 18, and pre-COVID, most of the banks, including SBI, and I can speak for SBI, we were hardly seeing anything, which is why, as I said in my opening remarks, the Kamath committee proposals have hardly been taken up by any corporate. So given that scenario, my view is that the current phase will have to be taken forward by all the corporates. They have to conserve cash. But as the economy turns around, I think not only the corporates will turn around, but the banking system will also. I do not foresee a very gloomy period for the entire banking system. Some sectors could need support, but it will come around very fast. It will take time. If you say tomorrow, no, maybe 1 year, but it will come around very fast. I wanted to mention that.
Thank you. Mr. Ghosh, recently I read one of your interviews where you said that the rural India is untapped and there is a huge credit need in rural India. So do you think that this recovery of Indian economy post-COVID, whatever shape it takes, whether V, U, W, I don't know, but do you think it will be triggered by the growth in the rural India? Will rural India lead the recovery of India?
I agree on that, and I have been very strong my experience and comments on this. The rural economy will be growing fast, even the time of the COVID situation also, normally also. But we are not focusing the rural India. If I give the 1-2 example, you understand about it. Whatever the growth has come rural, without the banking service. We have that 11% bank branch in a rural, and 70% people are living in rural. Is it the enough bank branches network? No. If you say that the priority sector lending, 40% for every bank, that is a major is coming from the rural. Every bank quarter end purchase from NBFC, MFI, and other banks. Why not? The bank will be like to open the branch in those areas and serve to those customers. Third, my point, it cannot be, I am not like to divide on that. I said that the main objective of the banking industry of government to hold a 60% of the bank held by government. Objective is there how the bank can be reached to the more in rural and serve to the unorganized sector. Why till now it is not going to that level? Private sector bank have been calculate the branch profitability, fine, but public bank is not like to that way. The government is taking all these responsibilities. Why not going on that? So how our economy can be grow? How the economy will be contributed by the rural? And we are only say that only agriculture is a rural. If it is an agriculture in rural, related to agriculture, lot of industry have been developed on that. If I give the one example on that, the many example in our country, in the rural one, women given 3,000 rupees 20 years before. Now they have the own income is a 50,000 rupees per month. Is it not the opportunities to serve to this level? Why not the banking industry till now not focusing on that areas? If it is not those areas will be go, so India will be vulnerable to grow the economy without the rural. That is my.
Absolutely. And you are quite spot on, because the real sector has already realized the power of the rural. And that's why all the FMCG companies are going to rural to get their demand. And these banks which have to follow them. You are absolutely right. Now I turn to Tomalda. When I look at your previous books, this is your sixth book. You have written book on HDFC Bank, in fact, two books. Book on Bandhan Bank. So all your books are a chronicle on a particular entity or the chairman, the leadership style, and so on and so forth. Perhaps this is the first book where you're looking at this sector as a whole. It's a grand picture. So I would like to know that it's a different style, different type of book from your previous one. So what are the challenges that you have faced? Can you highlight one or two challenges that you faced as an author in writing this book?
Yeah, it's been extremely challenging. It's very difficult task, because as you rightly said, all my previous books actually chronicle the story, barring one, but that was a sort of collection of essays. It's little disjointed on different subject between from Lehman to demonetization, 10 years, how the Indian economy and banking progress. Here is an extremely challenging thing, because there the constituents are, there is the central banks, Reserve Bank of India, there are the commercial banks, and then among them the private banks and old private, new private, and public sector banks. Then you have non-banking finance companies. Then you have police, investigative agencies, CBI, CVC, judiciary, IBC, legal framework, bureaucrats. So it's a very vast canvas. So it's an extremely challenging thing. Just to give an idea, between September 2018 and March 2020, thrice Reserve Bank of India had to come and issue statement that our banking system is safe. When did you hear this? Only once, about one large private banks which had some exposure to an Indian bank's overseas branch post Lehman. There are some kind of issues there, and RBI had to issue a release that this bank is safe. But here RBI governor is telling that your money is safe, rest assured. So this is the kind of situation. It's an extremely sensitive situation where people also don't want to talk. So it's the four governors I have taken on record interviews on the same subject, but I have probably met more than 400 people. The acknowledgement refers to maybe 20 odd people who have handheld me and told me no. But there are many more, as I said, in central banking, among commercial banking, in the corporate world, among judiciary, among investigative agencies. So the biggest challenge was make them feel comfortable and get the story out of them, and also have supporting evidence that this story is like the story is one banker, in Kolkata. I would not like to name, you read the story and all. That person was about to retire on that day, evening in the boardroom, the farewell function is on. At 5 o'clock sharp, the farewell function will be given. At 4:57, email comes from Delhi, you are sacked. Or a story of a bank in Maharashtra, that gentleman had a meeting with then a minister who was holding the charge of finance, came back from Delhi late night rather. Next morning went for his yoga classes. That day there was no physical exercise, but there was only some bhajanas he had to listen to, which basically says the lesson is that you be mentally strong to tackle everything else. And from there, on his bicycle, he goes to the sabji market, and he comes back home and he finds that CBI pose or policeman there, said, you are under arrest. or yet another ex-DMD of a large bank coming back from morning walk, security guards telling him, "Sir, आपका घर में कोई आया?" And then he found that pose of CBI inspectors, and the search is on till late evening. And in the evening, casually he was told, "Let's go to our office in BKC Bandra," and he was asked, "Do you want to take some medicine with you? Do you have any medicine like to have at night or this thing?" Even then, he could not understand what.
We have lost the storyteller. So, of course, he will join, but let us continue. I have a question for Mr. Basu. RBI in its annual report of 2019-20 has mentioned that the fraud in banking is huge. In fact, they have given a number that between July 19 to June 2020, the amount of fraud, bank fraud, total, public sector plus private sector, jumped to 1.85 lakh crores. In the last year, it was only 71 or 72,000 crores, so more than double. And one of the reasons they cited on the book, in the report was the lack of monitoring, particularly lack of use of early warning system. So I heard you talked about public sector banks. You cannot blame them alone, but out of this twofold increase in the fraud, 80% were in the public sector banks. So is there any problem with monitoring? RBI said EWS is mandatory, and yet they found that there is a lack of use of EWS checks and balances. So what is your view on this?
Right. So the point is very well taken. What RBI has said in principle is right. So let us again understand how this happened. So the corporate banking, when we talk of frauds in the public, it includes that there is a dhokadhari and all. It's not always the case. So operational frauds, number one, is still very limited. Operational frauds would constitute about 1 to 2% of the number that you mentioned, which is given by RBI. So 98% of them were credit related. Now in credit related, one of the aspects certainly is monitoring, right? But again, if I go back and see how these issues have arisen, so it is the way in which business has been, or to some extent, hopefully today we are correcting things, has been conducted. So RBI has a very large definition. If you go through their circular on frauds, so for example, I'll take one very benign example. In banking parlance, we say that when you lend for working capital and that money is used for your capital expenditure, that also is called diversion of funds. So some of these, but necessarily they have not happened in the same company. As long as it is in the same company, you can say that it is a financial irregularity, but it is not a fraud. They should not have done it. But they have gone to the extent of looking at their company being part of a larger group. So they have drawn money in one of the companies and gone ahead and invested in some other. Now, did all of them have bad intentions or fraudulent intentions? Not necessarily. When the economy does well, many of these investments, which ideally should have come from equity, has got diverted. Coming to your point on how much the banks can prevent or can do, to some extent, yes. Early warning signals have been tightened. Say, for example, we started on the early warning signals 4 or 5 years back, but they were mainly manual. There was a time when the most effective early warning signal was to look at every check that was being passed. We have done it when we were credit officers, and we knew where the money is going. Post the computerized system, that becomes a bit of a challenge. Today, we have artificial intelligence and machine learning, and along with that, many software, which is enabling us to catch it. But the most important thing is that what would be the intent? If we are very clear that the promoter and the company has an intent of doing things right and using money in the right way in which it has been given, these problems would not arise. So it is a very, very delicate relationship that has to happen. Otherwise, today I started again with my talk that banks are not lending. So if we were to implement all that you are saying, and implement it as ruthlessly as you are recommending, whatever lending we are doing today will go down even further. RBI has relaxed for medium and small enterprises. These people need support. If I were to tell them that first you get your house in order, I have done monitoring, आपका पैसा यहाँ जा रहा है, this money I am giving is for X and you cannot use it for Y, there will be complete chaos. So we have to come to a relationship where it is balanced. The banks will have to be partners, I keep saying, and to a very large extent we have managed to do that. And I do not want to share data, but some of the good banks, including SBI and some of the large private sector banks, we have come to a stage where we have given loans in the past 3 or 4 years, which of course some of them can go bad, but they'll not go bad for the reasons that you are mentioning, and we will see at least large scale implosion of frauds. And fraud shot up for the simple reason that these NPAs which turned were all taken into the books in 2 years. These would possibly, without restructuring, have become NPAs in 2010-11. You would have had a very distributed rise in the number of frauds. But what has happened is that some suddenly come up. It has been cleaned to a very large extent. But going forward will be the test. If you were to ask me, am I 100% confident that nothing will happen? Definitely not. But will things be better? Whether it is a private bank or a public sector bank, I'm very confident that going forward, this will be better.
Yeah, absolutely right. That otherwise, bankers would stop lending. They'll become too much risk averse. So it's a fine balance between monitoring and doing the business. One story I hear from bankers, Mr. Ghosh, is that why they are not so much present in rural India is they say the collection cost is very high, getting the money. So what is your experience? Is the collection in rural India a real challenge? Is the delinquency high? What's your experience?
No, if I live in a metro, I will decide to go to the rural. I can go for tour, for holiday enjoy, but not for a work. So the point is there, the whenever we are recruiting in the banking industry, the people from MBA institute like your institute also, all that, these people are very much habituated to life maintaining in the urban and metro. So when you go to the rural, open the branch, you sending them as a transfer, they immediately drop. So that is a big challenge for banking industry. So I hope that the rural also more people in there, many colleges in a rural, recruit in a rurally and trained in a rurally and start to promote in that rurally. That can be one way that can be helped to grow in rural more. That is, I say that the separate category of the people should be developed in a skill who can be born in a rural, working in rural. That can be solved this issue. Otherwise, if we make a plan on that to open the branch in a rural and more and transfer from the urban, that is a big challenge on that. Today, gradually, another problem have been going to solve, that is in a IT infrastructure.
Yeah.
If you go to this rural, IT infrastructure not that much good, which a customer can get the good service on that. That also gradually it is improving, but not in a that mark on that. We are fully dependent on rural in a BSNL. And if it is a one connection have been disturbed, you can make a call. There is a need in a 3 days or 7 days, you do not know. So that is a challenge. Until the other private sector in the connectivity service will not go to the rural, that is a big challenge, no doubt on that. These are two are basic challenge on that. But business-wise, rural is not costly. If you see that the rural premises rent is lower than the urban and metro. And if you separate cadre will be built up in a rural, that is also cost is lower than the urban and metro. And rural growth is coming very steady. If you set the deposit point of view, very steady, it is not fluctuate on that. Immediately transfer to another bank or mutual fund, not like that. It's a very good way we can be like to grow on that. So, but primary investment will be needed. I am going on that government bank. They have the government money. They can invest in the beginning. What is the wrong? And maybe after 3 years, instead of 3 years, 4 years will be like to make as an sustainable. But my experience, my rural branch, is a coming as an the profitability the earlier than the metro branch, because metro branch cost is very high, and the rural branch cost is low, and business also growing very good on that. So in that sense, that it is not a very cost high, but maybe the other cause on that.
What about the recovery rate in the rural area?
Rural recovery rate better than urban and metro. If it is said that in my microcredit also, if it is a 98% the total collection efficiency normal time on that, and rural is a 98.9%. The 1 to 1.5% higher than even some area of the 3% higher.
Oh,
in the rural. So rural is a very good on that, and very people also simple, fraudulent, whatever the earlier point you mentioned, fraud trend is very low, not that much. No, and no little bit competition is not in there. Very good way can be like to drive the business.
Yeah. So there's a huge space for coexistence.
Huge space.
Okay, let me just ask the organizers, how are we doing on time? Because it is 6:19. I was told to finish it by 6:50. Unfortunately, our Tamal, the author, is having some connectivity issues. So, Chitralekha, can we continue? Is a question from the audience. How do you go about it?
Yeah. Yes, we can if there is any questions, because I believe the audience is totally engrossed and I couldn't see any question. But if there is any, we can take up those questions.
So while the question comes, let me ask one more question. It's an open to both the panelists, which is not today. Yeah, I'll take it. But today, when we talk about banking and other financial services, we cannot ignore the disruption that the technology is creating, so-called the fintech. And every bank is seized of this matter. And they are trying to learn the good things from the fintech and also, not take the bad things of fintech. So my question to both the panelists is that this traditional way of banking, what do you think? That is it going to be hugely disrupted, not only in terms of process improvement, but also in the way banking is done, the pure business model? Do you think technology is going to change the way banking business is done? So, Mr. Basu first, then Mr. Ghosh.
Yeah, so it has already done so. And a very quick answer would be that the best way for bank is to partner the fintechs. And fintechs need the support of the banks. Banks need the support of fintechs to come up with new products and services. Change is happening almost every day. You have heard of open APIs for MSME and so on and so forth. Two things banks have to do: constantly be at the cutting edge of what is already available. Because by the time you do that, some new thing would have come. You're talking of blockchain or AI or ML and things like that. By the time you implement it, some new invention would have come. So you have to build that up. And at the same time, the others who are much smarter, fintechs come with a lot of smartness. You need to collaborate with them, work on platforms with them. And I think all the good banks are working on that model and and as Ghosh Saab said, that there is no bar. And in fact, the rural area, the opportunity even for fintech and digital is far more, contrary to popular belief, is far more there than what it is in urban and middle class India, where things get caught on much faster. There you can do a lot of things.
Yeah, Mr. Ghosh, your views, please.
No, I've been agree on that. Mr. Basu have been mentioned about it. Fintech is a very big opportunities for banking industry now. But my two points in here. My learning, finance is a trust. So when you make a trust, physical trust, people like it. When they are doing that to divide in this, The liability side is the savings part. And the savings part is in fintech, very, very tough on that to initially convince to the customer on that in Indian perspective on that. And rural perspective also same, because people are face a lot of fraudulent trend on that. So they are not very much comfort with this, the fintech for deposit service on that. And if you say that the business correspondence and that have been also not very much successful on that way to attract the deposit from the customer. But credit point of view, yes, it is correct. Fintech can be helped on that to address to the rural people more, and it is a new window open for banking industry. I feel that with the fintech is needed the physical touch with the customer, and physical touch will be given the better understanding to the customer level, because you cannot get that who have not yet come to this is the credit bureau. I do not know their trend of this the transaction of this customer profile. They have not in the account in a bank, or they have the account in a bank, they are not regularly transact. I do not know the profile of this customer. How the fintech will be like to comfort to lend to this customer on that. So it's a need on that the big database can be like to build up and address to this customer, even rural or middle income or low income. They can be regular transact to the bank with the deposit part. Then their profile will be built up. Then fintech will be more successful come on that. This is my observation.
Absolutely. Absolutely. Namala, are you back? I think you can hear us.
Yes, I'm sorry. Yeah, I'm sorry. I have half a dozen Wi-Fi connections at home, but some days every some renowned names in the technology world in India, but everybody fails. So yeah.
Yeah, so Kamal, there is a question, and there's a chapter also in your book on rating agencies' role. So I'll pose this question to you. And the question is from Mr. Chitto Ghosh, who says that the rating agency says India, Mexico, and South Africa are among the banking systems that will be slower to recover to the pre-COVID level. It may take even up to 2023. So do you think that this is a good assessment that the emerging markets will take so long time to recover post pre-COVID levels?
Well, I guess I guess I'm not an economist, so in that sense, I don't think I'm qualified to answer. But because I'm not qualified to give a comparative estimate between the developed markets and some of the other markets. But I guess still the jury is still out. Certainly, had this discussion taken place 1 month before, we'd have a different sentiment. But now everybody, you see the September quarter result, Mr. Ghosh should know, State Bank of India, 95, 97% collection, lesser number of people asking for moratorium, all the high frequency data, everything looking pretty good. But is it a festivity related stuff or is it sustainable? We need to see. But as of now, things are pretty good. Much better than what we had thought. So definitely worst is behind us. Incidentally, about the rating agencies, I have one chapter in the book, who will rate the rater. So how dependable are the assessment of rating agencies, not at the macro level, at micro level, where they go wrong, how they go wrong, even the governance issues which plays the banking sector in certain areas, credit rating agencies are not free from them.
Yeah, absolutely. In fact, in India, one of the very few countries where rating agencies also do risk management service. So they give non-rating service also. There's a huge conflict of interest.
Yes, this is all explained. There's a chapter I said, who will rate the rater?
Right.
This is correct.
So I think I think we had an interesting discussion, but for a few moments we missed Kamalda here. But we had a good deliberation. I hope the audience, the participants have enjoyed. So thank all the panel members. Thank you all for elucidating your points and view on the banking sector. I now hand it over to Chitralekha.
Thank you.
Thank
You
you.
are
What an insightful listening to this, and it was so much enriching for all of us. Thank you. At the outset, I, on behalf of our organization, PRSI Kolkata chapter, would like to thank the publisher, Roli Books, and the author, Tamal Bandyopadhyay, for giving us this opportunity. We thank Srimati Rita Bandyopadhyay for her time and the melodious Saraswati Mandana. We sincerely thank D.N. Ghosh for the brilliant keynote address and the moderator of this panel discussion, Professor Ashok Banerjee from IIM Kolkata. I would also like to thank our speakers, Arijit Basu, the former Managing Director, State Bank of India, Chandrasekhar Ghosh, Managing Director and CEO, Bandhan Bank, and Kamal Bandyopadhyay, the author once again. Special thanks to our executive committee members and our technical team who have been the backbone of this program. And last but not the least, thank you, dear audience, for being with us throughout. We look forward to your support in the days to come. With this, our today's program comes to an end. Good night and stay safe. Wish you a very happy Diwali.
Thank you. Namaskar.